I mean, and you have J.P. Morgan and BlackRock as the custodian of the world's largest silver trust, SLV, the same company who paid a $920 million fine to the Justice Department for suppressing or spoofing the metals market, is allowed to be the custodian, along with their pals BlackRock, of the world's largest silver trust. You would think it would be far easier and more palatable for the world when they look at the world and say, well, what? All we did was close SLV, unless you have a basket, which would be millions and millions and millions and millions of dollars worth. These are the people that actually fund the account typically, like the commercial banks. None of us can take possession of it anyway. So it's an asset that tracks the price, or it's an ETF that tracks the price of silver. And not even that great at that, but it is the largest silver trust in the world. And it would be far easier for JP Morgan to close that account, pay everyone their fair share of what their account was worth at the end of business on Friday, and say to the world, all we did is what the prospectus allows us to do. Now you're sitting on a huge stockpile of silver without breaking any laws or infringing any civil liberties. And, it gets interesting when we talk about JP Morgan, by the way. The Economic Times just came out with a report saying that they hold over 750 million ounces of physical silver. And that's worth more than $40 billion. And it would be the largest stockpile on the planet if that were the truth. The report is very interesting. It says they didn't just stop shorting silver, they actually flipped and became the biggest long in the market. It said that in 6 weeks, JP Morgan added 21 million ounces while closing a 200 million ounce paper short position. So by removing that paper short, they remove the pressure that keeps the price down. And while buying the physical metal, well, this is going to push prices up much higher. They also mentioned that they took 16.6 million ounces out of the registered inventory, and it left COMEX completely gone. We don't know where it went. And when 16 million ounces leaves COMEX, it ain't coming back ever. That would be my guess, an industrial. Silver is what's called a Giffen good. What Giffen good means is the higher the price goes, the greater the demand. Most assets don't work that way. They say the cure for high prices are higher prices. Not with silver, because you have the industrial component of it where you need it to make your Tesla, you make your iPhone, to make your solar panels. And Samsung, which is one of the things you and I talked about offline there, the rumors are that, yeah, they've been flying around or Samsung flew to Mexico and to strike a deal. But this is what a Giffen good would be. If you need that silver, and it's called inelastic, by the way, silver is inelastic, which basically means you only need $30 worth of silver to make a $1,500 iPhone. You don't care what the cost of silver costs. You need it. And it represents a very small price or a little bit in a high tech, relative in terms of its cost, a few hundred ounces, maybe in a military grade missile that sells for $5 million. You don't care what it costs. You must get it. And so you get all of these entities fighting with one another, so to speak, a battle between the industrials and the investors. So when you see that kind of metal actually move and leave the marketplace, it's something to watch and be very cognizant of. They also talked about the fact that they moved somewhere in the neighborhood of like 166 million ounces of silver. They moved it 169 million ounces of silver, and they moved it into what's called a non-deliverable vault. Now, this was something that was new to me. I dig in a little bit because I thought either it is or it isn't in the COMEX ecosystem. And it technically, these 169 million ounces, technically they still exist on paper and could be moved into COMEX, but it's legally removed from the delivery system, and it cannot be used for COMEX settlement unless it is re-registered. So, not only have they accumulated 750 million ounces of silver, and they have forever always been the biggest short, but they've flipped from short to long. They added 21 million ounces while closing a 200 million ounce paper short, according to this article. And then at the same time, 16.6 million ounces left the registered category, left the building. Goodbye, silver. And 169 got moved into vaults outside the COMEX deliverable status. This is not defensive posturing at all. This is intentional removal of metal from the delivery pool. And if it is true, it marks a huge shift from suppressing silver with paper to accumulating physical metal. And you want to talk about bullish. At the same time, and you can stop me anytime here, COMEX deliveries have been unusually large all year, Kaiser. In November, which is typically not a delivery month, we had almost 17 million ounces of silver and about 1.5 million ounces of gold that were delivered. In both cases, gold and silver, it's not a delivery month. By just the 12th of December, deliveries have already reached 58 million ounces of silver and almost 3 million ounces of gold, with contracts still being added daily. Now, ask yourself this question, and this is what I've been trying to scream to people. I don't care what the price is doing. It doesn't mean anything. What does mean something is that the people who in just a handful of days deliver, 58 million ounces of silver and almost 3 million ounces of gold. Who's got the money to do this? You're talking billions and billions and billions and billions every single month, right? Since November. 13 months we've seen this, since last November. The people at this level who throw around that kind of bread, they don't do it just for the hell of it. They know what's coming. They do, and they position ahead of the crowd. Now, one way that they're trying to stop the run on all of these deliveries, because there are some banks that are offsides, to slow things down when registered silver continues to leave the COMEX, and when it does, it's gone completely out of the system. And as metal keeps draining, COMEX does what it always does. It raises margins. And now, because prices are running too hot, or not because they're running too hot, but because the delivery pressure is becoming too much. It's building. And so higher margins force levered traders to sell, people who are on margin. And it would typically shrink open interest, meaning open interest is who's got long contracts that could stand for delivery. And, one of the things that, to me, if you look at it as a kind of a pressure release valve for physical delivery, it's not about the price. That's what people think. It's the price is getting too high. No, not this time. I think it's more about all of the deliveries and the people on margin who stand for delivery. They have to unwind their position. But, the idea is get rid of paper claims faster than the real metal leaves, right? But it's not working. It's not working even with lease rates right now around 7%, which are way above normal. It's because the people that are buying this stuff right now are not on leverage. People that are buying this stuff have lots of money and they're standing for delivery. It's kind of like, if you live in a really fancy neighborhood in a gated community down here in Florida, and there are a lot of them, people coming in to buy houses there are not taking out mortgages. They're coming in and paying with cash. And that's why higher mortgage rates doesn't affect the property in those areas. It's the same thing here, is that rising lease rates only affect those on margin who are trying to use leverage to achieve what they're trying to do. But that's not happening here, because the buyers that matter, well, they're not leverage traders, and they're industrial users, they're long-term holders, they're sovereign wealth funds, they're central banks. And so all this really did was move the silver from the weak hands to the strong hands who came in and bought it. And you can see that because normally when they raise margins, price collapses like that. Not this time. In fact, it came right back up, and here we are today. This happened on Friday, and here we are today. Silver's up over $2 again. What was supposed to scare the market just turned in, to kind of a shakeout rather, and the leverage got cleaned out, and the available silver got tighter, and the price floor got stronger. Something to think about.